Yeah, Amrish, we'll just come back to you. By the way, we've got getting the other numbers that are up for you on the screen. So on the top line, it's more or less in line. The beat that has come in there is because I think of lower operational costs, and that explains why, if I saw that number correctly, on the EBITDA front, there's a good 500 crore beat out there, 5 to 600 crores. So I remember some part of the street was talking about this. Such a big beat on Tata Steel's India business. So the street was baking in that maybe the other couple of companies as well that have a similar mix should do well. You know, JSW Steel has a higher amount of flats. So that could explain why, in fact, you know, that's come up higher. In fact, if you look at it, there's a good growth on the top line. And the power and fuel cost is sharply lower on a year-on-year basis. So that's one reason that's playing out there. And I think that's the primary reason why, in fact, we are seeing this big beat in terms of the EBITDA front. And that's why the margin number has come in at around 17%. We were working with mid-teens. Rakesh Arora of GoIndiaStocks.com joins us on the show. Hi, Rakesh. Well, the initial numbers that we have on the screen is top line more or less in line, but it appears the costs dipped more than anticipated. And that's why that's a beat out there. Your reading.
So, Nigel, I think, there's a little bit of lag between, raw material prices going up and or going down and being passed on. So I think that's where the beat has come in. But I think, going forward, steel prices are lower. Iron ore prices have moved up. Coking coal prices have moved up. And as Tata Steel was mentioning that, even in their results, almost 1,500 rupees per ton was just because of inventory gains. I think same is the case with JSW. And let's also not forget that JSW iron ore costs are much more linked to international prices. And they'll have a bigger impact getting into Q4.
Okay, we've got Abhijit Bora also joining in to react to the JSW numbers. He's from Sharekhan. Abhijit, you want to give us your initial take and what would you advise on the stock now?
Yeah, firstly, we have a neutral stance on the metal space and we have a reduced rating on JSW Steel. In terms of the results, if you see the consolidated PAT came at around 2450. Our expectation was around 2100. So there is a slight beat in terms of the overall PAT. There was a slightly higher standalone EBITDA and also slightly higher better performance from the subsidiaries. So there is a slight beat in the overall PAT of the company. We are waiting for further details.
Okay, all right. There are a couple of more details that we're getting up for our viewers on the screen. And the Bhushan Power and Steel asset, well, that's done quite well. The EBITDA number has come in around 780 crores. So, as Abhijit said, I think part of these subsidiaries as well have done quite well. So the numbers go down as a beat. The costs have dipped more than anticipated, and you have some of the subsidiaries that have done better. Rakesh, it's almost market close. So final word from you before we let you go. Between the two, JSW Steel and Tata Steel, as well as SAIL and JSPL, what would the preference be? Both these two have delivered better than expected numbers, but valuation comfort, I think, is in the other two.
And also, Nigel, that, Tata Steel is slightly more consolidated and integrated for iron ore, where prices have actually moved up quite reasonably, even in India. As you saw, NMDC yesterday raised prices by 400 rupees. So I think integrated players would be better placed as compared to JSW going into Q4.
Okay, all right, gentlemen. Thanks a lot for joining in and giving us those details. So the big headline that comes in there is that JSW Steel's operating profit is better than anticipated. You have a couple of the subsidiaries that have done well, and a couple of them, the larger ones have done well because JSW quoted actually the profitability on a sequential basis is a little bit lower, while on a year-on-year basis, JSW quoted's numbers look quite good. So the numbers are a beat, but sustainability of these numbers will be tracked. For the time being, slip in a short break, come back, count your focus on markets, and we'll take you through the end of this expiry.
For more news and updates, all you need to do is follow CNBC-TV18 on all of our digital platforms.